No, actually, the pace at which things are moving globally is absolutely unprecedented. I think there are three things about the world. One is everything is unpredictable. Second is everything is faster. And third is everything is questionable. There is so much of change happening at such a fast pace. It's so difficult to even fathom what's happening. And some of these are like really transformational, which will have huge implications in the long run. And some of it is pure noise, which looks like very big. And 3 years later, we'll say why we were paying so much attention to it at that point in time. So only future will tell us.
Navneet, you are a CEO of a listed company yourself. Are CEOs listening to markets more than how they should build their businesses?
I won't say that you should listen to the market, but at the same time, I think you should do what is right for sustainable, durable, long-term growth in the business. And ultimately, how do you communicate that to the market is more important. But I think the lesson from them is like markets are supporting investing in future. What we are seeing in corporate India is like maybe a more of risk averse, and that's also kind of like investor behavior. So life expenses are increasing, life expectancy is increasing, life expectations are increasing, and this generation first time is getting this awareness. So I need to not only save more, but I need to invest rightly. Success is like being at the right time at the right place. So we are so privileged that in India, right time at the right place. यही समय है, सही समय है.
Hi friends, so today's episode is really special and little bit of a fanboy moment for me also. So we have Mr. Navneet Munot, MD and CEO, HDFC AMC. Welcome Navneet.
Thank you. Always a pleasure meeting you.
Yeah. And I must tell you why I said fanboy moment, because your person of the year column is eagerly awaited end of the year. So we are almost 7 months in the year. So if I want to kind of hazard a guess, who would be your half year person of the year?
No, actually, the pace at which things are moving globally is absolutely unprecedented. I think there are three things about the world. One is everything is unpredictable. Second is everything is faster. And third is everything is questionable. There is so much of change happening at such a fast pace. It's so difficult to even fathom what's happening. And some of these are like really transformational, which will have huge implications in the long run. And some of it is pure noise, which looks like very big. And 3 years later, we'll say why we were paying so much attention to it at that point in time. So only future will tell us.
So Navneet, very interesting you said, and coming from you, almost 3 decades of market experience, I'm obviously much younger, और मुझे भी लगता है कि कुछ ना कुछ तो मार्केट में होते रहता है, but coming from you, you're saying that you feel that the pace at which things are moving is unprecedented, which means you possibly have not seen it in the last 3 decades. Is that a fair point to say?
Something or the other is always changing, but at the same time, if you just look at the amount of change, the geopolitics is realigning in a manner that the world is not used to since the end of World War II. For 75 years, I think a move towards multilateralism, the move towards like democracy is becoming more stronger, world getting more globalized, goods, capital, labor, ideas moving at a faster and faster pace. All of that is changing quite a bit suddenly. The technological changes, whether you look at AI, whether quantum computing and many others, are really transformational, very fast change. Demographics, suddenly you have a large part of the world getting worried about demographics because maybe the population is unlikely to increase or rather going to decrease in many parts of the world. The largest growth driver in the last 30, 40 years is China, which is going to rapidly aging society, Japan, Europe, many other parts of the world. And if immigration is not the way it has been, even a US will have a challenge on the demographic side. You look at the whole climate change, I think we are really reaching a tipping point and the world has to kind of respond in the right manner. The leverage which is there, particularly in the developed world, earlier the macro challenges were with the emerging markets. That's
Yeah.
why you used to have crisis every few years.
Yeah.
Now you look at the developed world, the size of the central bank's balance sheet and the fiscal debt that they have, and an aging population, lack of growth drivers. So some of the macro challenges are bigger for the developed world. Now I can go on
Yeah,
in
yeah,
this
yeah.
path. It's just too much. And also the pace of change, I think, is very, very fast.
I'll just pick a cue from what you just said, and which is kind of directly linked to global markets, also Indian markets, is this whole talk about de-dollarization, right?
Mhm.
And some of it is again maybe noise, but some of it may actually be true. So I'll just give you the way I'm thinking, and obviously then I'd like to hear from you. The sheer availability of any alternate currency is not there,
Yeah.
right? Dollar is the only currency available at the scale at which global trade is
Yes,
happening.
yes.
Now, when euro came into being, there was so much talk about euro being the alternate, but
Yeah.
it obviously hasn't happened. China has its own issues. How
Yeah.
many people will trust
Yeah.
the Chinese currency, etc. So some of these things are there. But if US is actually serious about curtailing their deficit,
Yeah.
then obviously the supply of dollars gets reduced.
Yeah.
How does the world trade gets kind of recalibrated in such a setup?
Yeah. So, of course, the dollarization of the global economy or the global trade or the global markets has been a long journey. Before dollar, it was pound
Pound.
sterling
Yeah.
and then the dollar because they were the dominant power, political power, economic power, free markets, uh, strong institutions, and they kind of like world trusted them. I think Mr. Uday Kotak has talked about that. US has this extraordinary privilege where your credit card, where you don't have to worry
Yeah.
about
Correct.
paying the bill at any point in time. But looking at some of the recent challenges and the behavior of the leadership there, we really don't know the future. So on one side that there is extraordinary amount of debt that has been accumulated, particularly since the global financial crisis in 2008, and those bills have to be paid at some point in time. The debt to GDP, whenever it crosses
Don't they
100%,
really have to be paid?
in some manner. Otherwise, they will just kind of like deflate it through some manner. Either it's a currency depreciation or hyperinflation there, or in some manner, which we are seeing, right? The dollar has depreciated. You rightly mentioned the word. There is no alternative. The TINA factor, which they have benefited from, because Europe had its own set of challenges. In 70s, 80s, people thought Japanese yen could be the next one. Then later on, people thought maybe a combination of BRICS currencies before the Chinese RMB, but nothing has really come so far as a viable alternative. And that could be one of the reasons why gold has been doing well. That is one of the reasons why some of the cryptocurrencies have been doing well. But are they the real alternative? Not necessarily. So maybe I think we go from a unipolar world to a transition over a couple of decades to a multipolar, multi-currency world. And then maybe 20, 30, 40 years, if India gets its act together and we really become a developed country and build similar kind of or stronger institutions and win the trust of the global economy and markets, who knows, 40 years later, we
I'll
could
come.
be.
Obviously, I love to hear when you so passionately talk about India in 2047. So we'll come to that in a bit. Let's just stay with the current state of affairs. So Navneet, while this entire turmoil is happening globally and India also had a border skirmish, thankfully a small one, and there are set of challenges in the macroeconomic setup in the Indian context also. Growth has been slowing down. What do you think has been the key driver for resilience of markets at least? If you see, although okay, broader indices have kind of been flat over the last
Yeah.
1 year, but if you look from a 4-year, 5-year perspective, in an environment when there is a war in Europe, there was issues in Middle East, there are issues at our borders, growth slowing down, global inflation,
Yeah.
so much issues which are there. Markets have been just too resilient.
Yeah.
What do you think are the key reasons, or you will attribute what which led to this kind of resilience in the
Yeah.
market?
So on one side, you have structural growth factors that gives confidence to the market that the long-term story is very much intact. There could be some of the cyclical challenges. We talked about maybe a bit of moderation in economic growth or corporate profit growth. But if you look at India and you compare with the rest of the world, in one breath, you cannot say this for many countries, what I'm saying. Political stability, social stability, macroeconomic stability, and financial stability. Balance sheets are in good shape, whether it's corporate sector or the financial sector. You look at the external sector in terms of foreign exchange reserves. You look at the social and the political stability and the economic reforms that have been done. Of course, the aspiration for growth are much higher. This is what our government is saying. This is what RBI has mentioned. Why they are they have been pursuing the accommodative policy simply because they want higher growth both in credit as well as support the economy. So whether it's policymakers, businesses, society at large, we all want higher growth. And I think the market's resilience is that there has been a policy prudence, there has been agile execution, there has been effective communication relative to when we look at some of the other economies. But another important factor has been the resilience of domestic investors. I think the money coming in from domestic investors has provided a lot of stability to the market. That has taken out the vulnerability of our market on the global economy or global markets or global flows. In last 4.5 years, since the beginning of 2021, domestic mutual funds have invested over $150 billion.
Wow.
$150 billion. And if you add like the money coming in from insurance and the other institutions, that's almost like $200 billion. That has provided a lot of stability to the market. The constant flow of domestic liquidity has supported the market apart from the top-down structural factors. And then there is like, of course, all the hard work done by the corporate sector. Yeah.
Navneet, you speak so passionately about India, fourth largest, hopefully very soon third largest. Then the journey onwards is in terms of changing the rank is slightly tougher, but still we will hopefully will grow and our base will grow. The good thing I think possibly which has happened at India macroeconomic level is our population growth also has kind of become stable. In fact, I was reading some reports that we already are at 2.1 fertility rate, which is the replacement.
Stabilize
It
it.
stabilizes the population, whereas the GDP is growing, which means
Yeah.
per capita income will grow, per capita GDP will grow. And some of these macroeconomic factors obviously are well known. Some of the near-term challenges, specifically in terms of the near-term economic slowdown we are seeing. You mentioned that the balance sheets are in great shape, both government balance sheet as well as corporate balance sheets, but
Yeah.
they are in great shape because they are not investing, right? So if the long-term story is so great and the demand conditions hopefully will be great for the next 10 years, 20 years, 30 years, why are Indian corporates not investing?
I think one, they are investing. I think if you look at the overall credit growth, I think the MSMEs have been growing well. I think larger corporates were doing relatively more capex, but that has slowed down in last few quarters. I hope it reverses, and I think challenge is with the SME and the micro enterprises on the capex side. But the government has been doing the heavy lifting over the last 4 or 5 years in terms of the money they are investing on the infrastructure, and I hope that it continues over the next several years till the time private capex really takes the center stage and leads from the front. Variety of factors. It could also be the transformations that we just talked about. Nobody really knows in what manner and shape finally the deal will be with United States, and it's a large economy in the world. The implications it will have on China and whether they will start dumping every possible thing in every possible way in the rest of the world if the trade war is not stopped. Looking at the technological transformations and what shape and manner the manufacturing will look like and all. Having said all of this, I strongly believe that given that the capacity to invest is there, whether you look at the free cash flow with the corporate India, whether you look at the ability to borrow, and on the other side, as people get little more confident on the growth prospects and the policy certainty that we have, at some stage capex is likely to grow over the next couple of years. What we need to ensure is that corporate capex goes up very substantially and does the heavy lifting, because household balance sheets will have limited ability to invest more unless the corporate capex increases. They create more jobs, incomes go up, then only household can take more leverage. If that doesn't happen, how can you expect households to take more leverage? And government is already on the path of reducing the debt to GDP. That's a stated objective. By 2030 or so, a glide path has already been given. So then somebody needs to borrow out of the three balance sheets: government balance sheet, corporate balance sheet, household balance sheet. I think now is the corporate balance sheet that has to leverage over the next couple of years. Fortunately or unfortunately, even the market is giving excessive premium to, let's say, free cash flow, higher margins, higher ROE, and maybe not supporting the capex as much. You look at United States, Amazon is going to invest $100 billion this year, 100 billion in 1 year. You look at the capex plan of all the Max 7 or whatever the top tech companies, they're investing so much in future. India is known for frugal engineering. We are known for our frugality. But within that also, I think somebody needs to take more risk and invest in the future. And I hope that happens. Yeah. There's a need of
Please
the.
don't talk about Max 7. India's market cap is more than India's market cap.
Yeah,
So,
almost.
so,
No, but the lesson from, we don't know. I think we have seen many of these cycles. People have forgotten in 2000, GE and Cisco were the largest market cap companies. In 2007, it was PetroChina, was the largest market cap company in the world. That was probably, if memory serves me right, the first $1 trillion company in the world. And now we have seen some of these tech companies. There would be some cycles. But I think the lesson from them is like, markets are supporting investing in future. What we are seeing in corporate India is like maybe a more of risk averse, and that's also kind of like investor behavior where everybody is focused, and there is a reason behind it. We had a period like 2006-7 to 2012-13 where corporate India was investing very heavily. Credit growth was like 20% or so. There was a 2008 crisis, but the way monetary and fiscal stimulus was, the way the global economy revived thanks to the what China did and what US did, and everybody thought it was a small blip and invest even more. That led to a lot of challenges in 2012-13. We had like high inflation, we had current account deficit, we had fiscal deficit, policy paralysis, complete execution long jam, judicial outreach, regulatory outreach. We had all kinds of problems. Now we started taking the hard steps from 2014 onwards, just one after another. Clean up the corporate balance sheet, clean up the bank's balance sheet, clean up, I think, from the many reforms, whether in the form of IBC,
oil marketing company balance sheet,
all kinds of things. Now that cleanup led to a situation over the next like 7 or 8 years that I think everybody was like repairing the balance sheet, repairing the business model, and world has seen so much of change in that period. Just when people thought now a new cycle is beginning, and the 2020 happened, COVID. 21 was second wave. 22 was Russia-Ukraine war, inflation going up, rates going up, again some bit of uncertainty. So last 4 or 5 years, just when you thought a big investment cycle is beginning, you are hit with something or the other. And despite all the policy support in the form of, let's say, lower corporate tax rate, PLI, some of the other things that have been done.
Interest rates have fallen.
Exactly, interest rates have fallen and all of that. Somehow it's not leading to the animal spirits, if I can use the word, getting revived. I hope at some stage, I think society at large, collectively, we have to get that animal spirit back.
Navneet, you are a CEO of a listed company yourself. Uh, are CEOs listening to markets more than what actually they should, how they should build their businesses?
No, I won't be. I won't say that you should listen to the market, but at the same time, I think you should do what is right for sustainable, durable, long-term growth in the business, and ultimately, how do you communicate that to the market is more important. At our end, I just give you our example. Our industry has over the last couple of years has done very well. but you have to continuously invest in future. You have to continuously do that. How do we increase the penetration of our product even more? And there is so much of potential. We are investing in technology, which is like our entire digital infrastructure, digital experience for our partners and investors. But on the other side, we have opened more than 50 new offices in last 18 months or so. 50 new offices in smaller towns across India, and want to like reach out to more and more people, hiring more people, investing more in the future.
Okay. Uh, you mentioned about resilience of Indian economy supported largely by domestic institutions, of which retail investors have played a hugely transformative part. And there's a very interesting phenomenon which my boss keeps telling me about a lot. So I thought I'll pick your brain also, which is Indian households
Yeah.
at an aggregate level. It's a very interesting phenomenon that while SIP inflows, they have grown by almost 4 or 5x in the last 5 years.
4,000 to 28, 7x in the
7x in
last
the
9 years or so.
9 years or
Yeah.
so. At the same time, credit card spends have or credit card outstanding have also grown by 4 or 5x in the last 5 or 6 years. So this is a very interesting, some will say a jugalbandi of liability and asset, some will say a dichotomy that why are you borrowing and investing at the same time. So I just wanted to pick your brain on it, that it is a very interesting user behavior, consumer behavior insight. How do you think about this?
No, so both should be looked at differently. There is one commonality between both of these, that what it shows is the confidence in the future. People are taking leverage because they are more confident about the future. People are investing for the long term because they are confident about the future. So there is optimism on both sides. That's how I would look at one commonality. The other way to look at it, if you look at the number of people who have taken a credit card or who have taken the leverage, as percentage of population, that's still very small. If you look at the number of people who are doing the SIPs as percentage of population, that's very small. Like, I mean, our industry has got 5.5 crore investors, which is like hardly a very tiny proportion of the overall population. So both of them are still very low. India is at a very interesting juncture. You have a population which is digitally enabled, digitally empowered, digitally aware, and on the other side, hugely underpenetrated, hugely underserved on financial services. Now, this is a very interesting, I would say, intersection where your ability to serve investor has gone up many folds suddenly because of the digital public infrastructure. I give you our example. It took us 23 years to get to 6.5 million investors.
Okay.
In last 2
23
years,
years, 65 lakh investors.
65 lakh investors. In last 2 years, we have added 65 lakh investors. Now, but for the technology, it wouldn't have been possible. Yeah, our partners wouldn't have been able to do.
हाँ, इतने salesmen कहाँ से आते, इतने branches कहाँ से?
You have been like a
No, same with
good
us.
partner for us.
Yes,
How would you have multiplied
Yeah.
your number if technology wasn't a good enabler? Yeah, so that gives India a huge advantage. Also, you go back in the history of the world. You look at like US, look at the 1970s, 80s. You look at other countries. When you cross $2,500 per capita, some of these spheres in the financial services, they actually grow faster. So a lot of people think that, is it a short-term phenomena? There will be some cycles, of course. Market momentum has played a role if you look at the number of new demat accounts and all of that. So there are two ways to look at it. One is there is a cyclical aspect of it, but there is a structural aspect of it also.
Because at $2,500, your roti kapda makan has been taken care of.
Exactly, has got taken care of, and that's also from if you look at the demographics, the largest cohort that will increase is the people in 40s over the next 20-30 years.
So they will have
That's the age where they have surplus, they are thinking about many other things in life and start building about their retirement. And the awareness around is increasing. This is also coinciding, very interestingly, this is also coinciding with a big change in society. For hundreds of years or for thousands of years, just before this we were discussing about the number of cousins that we have, because the brothers and sisters your father's side and your mother's side had. Now think about it, now a family has one kid or two kids. Now they have to trust their investments a lot more than they can trust that the extended family will take care of
Safety net
me.
has changed.
The safety net has changed, and the And a proper financial planning is emerging as one of the important safety net, as important as like,
So very
growing
interesting.
your
I never
kids.
never thought about it this way, because yes, it is true that in an extended family there will be someone to support you if you fall
That's
on
how it
bad
has
times.
been
It's
for
always been.
hundreds of generations.
Yeah.
That's how it has been.
Yeah.
Now that the whole, I would say, the transition in the society where now you're thinking that I have to build my retirement nest. So life expenses are increasing, life expectancy is increasing, life expectations are increasing. And this generation, first time, is getting this awareness that my life expense is increasing, life expectancy in terms of number of years increasing, and life expectations are increasing. So I need to not only save more, but I need to invest rightly. This is the generation which
And
is first time feeling the.
so Navneet, it's a very, very interesting point. Actually, when we meet a lot of our clients in the bank, customers in the bank, we tell them that somehow this notion used to be there that retirement ke baad to life khatam ho gayi. Actually, after retirement, many of us and most of us definitely are going to live for 20 years, maybe 30 years. And they are just,
That depends on what's the retirement age.
let's say 60 is the
We
standard.
will live for 40 years.
So 40, 30, 40 years, and
Yeah,
there wouldn't be,
long.
so
When I meet investors, on a very lighter note, just to have the conversation, I ask people, sir, what do you worry more? You're living longer, you're dying early. And the way human brain works, because our wiring is like that, right? I mean, fight or flight, you were always worried about safety from
that is a DNA.
animals and all.
Yeah.
The immediate reaction, the spur of the moment, type 1, system 1 thinking is dying early. And I said that you can buy a protection, at least for the family, and you wouldn't know that you are gone.
Yeah.
Living longer is a risk that you have to prepare for. Living longer is a bigger risk that you need to prepare for. Dying early is a low
Yeah,
risk.
because everything else will be in a decline. Your income, there wouldn't be, your active income wouldn't be there anymore. Only passive income will be there.
Yeah,
Your health will be going down. So those expenses will increase,
yeah.
and everything will be in a decline. And unless you have prepared for it, your safety net, as you rightly said, is there. So yeah,
So
absolutely.
investing in future, given that I told you life expenses, life expectations, and life expectancy is increasing, and it's important the way society is transitioning that everybody needs to invest a lot more when you are in 40s, 50s, 60s in your physical health, in your mental health, in your emotional health, in your spiritual health, and of course your financial health, all together in like one plan. Need to have that.
You're giving me a very good
that-
startup idea, actually. So fine. I think we'll come to the last track, and I really, really was itching to ask you this. So Navneet, in terms of the large mutual funds which are there are very few CEOs, MD CEOs who are actually ex-fund managers. Uh, I could think of Mr. Nilesh at Kotak AMC and yourself. I couldn't think of anyone else.
Few of us.
Maybe, yeah, but
Yeah.
so how is this transition from active money management to being a business manager? And second, uh, what are the experiences, or I broadly using the term skill sets, that you bring from markets to a boardroom, which actually helps you think how you run your business?
That's a very interesting question. So, couple of things. First of all, I mean, you took other name, I mean, Nilesh Bhai's name, and then few others who have made the transition from being an investor to running the business. One that we always had the passion of building business also. We were more, I would say, apart from managing money, were also more outward looking. We were meeting our distributors, we were meeting our investors all the time. We were taking an active part in whether it's a product development, whether in terms of the overall organization strategy, deeply involved. You'll meet distributors and they would say, we know them for 25 years. We used to meet them when they were fund manager, when they were CIO, when they are CEO now. So those relationships have been cultivated. We have all worked very closely with regulators, even when we were fund manager or CIO or CEO. So have played, like I would say, our small role in like evolution of the market. So one, of course, we are in the business of investment management, right? In the business of investment management, you go to Silicon Valley and you see the people who are running those organizations. Who are they? There will be hardcore like techies. They would be the engineers. They understand the product well, and of course, the people like Steve Jobs who also blend marketing well. And I strongly believe that this is business of investment management, the profession of investment management. I think we bring in some bit of, I would say, knowledge of that, which kind of helps in running this business. The other thing that some of the names that you took, Nilesh Bhai, Bala, some of us who were fund managers made the transition to CIO and then the CEO. I think we were always active in the business. We had the deep interest in building relationships with our investors, with our partners, with regulators, with industry body, and all of that. We were always outward looking and then always building the relationships. Apart from managing money, building the team processes, we took a lot more interest in, let's say, developing products, developing markets, business strategy, etc. Also, that the extraordinary privilege you get as an investor is that you meet a lot of businesses, right? You meet leaders who have built businesses. You meet leaders who are nurturing, bigger ideas. And I think that also, in a way, helps in terms of what works and what doesn't work. And then I think somewhere you can use that knowledge and insight that you get from just by watching and observing people and learning from them.
So I'll tell you from an outside in standpoint, when we interact with investors, somehow the impression of a fund manager is someone who is looking at 8 screens and just looking at markets and doing nothing else. Somehow this impression is there. So hence I asked, because I know for a fact, because I have been a fund manager myself, so I know that is not the case. You have to be very, very outward looking. Unless you know what's happening in the economy, in the market, how do you take the correct decisions? But in terms of very specifically, very micro, I'm asking that a day job of a fund manager or an investment manager is to predict what a company is going to do.
Yes.
A day job of a CEO is what my company will do 3 years hence, 5 years hence. So how this transition happens?
Not necessarily. First of all, there are different fund managers with different kinds of aspirations, with different kinds of personalities. I think it's not necessary that a great player will end up as a great captain.
Yeah.
Not necessary that a great captain will end up as a great coach. Different people are wired very differently, and I think everybody needs to understand themselves better before taking up that role. India has been a feudal society. We just see the growth, like I keep telling people, analyst, fund manager, senior fund manager, head of
CIO.
equity, head of fixed income, CIO, CEO. That's not necessarily the past. Some of the most outstanding investors in the world in their 60s, 70s, 80s just continue by managing money. That's your passion. Our passion has always been like really managing money. At the same time, there is no like one holy grail. We thought that by observing people, by meeting people, by getting involved, you get better sense of the economy and of the ground. And it just helped us in evolving into that role, having deep interest in other people, developing teams, whether you hire traders or analysts or different kinds of people. I think it just helped in having that journey, but not necessary that you have to be outward looking and you have to follow that path. Not necessary. Everyone is wired very, very differently. Also, the long term and near term, I think even as a fund manager, you have to take a view of like much longer term while you keep an eye on the near term. For the management, I always say we need to have one telescope and we need to have microscope. You know every day what's happening in your business. Attention to detail is underrated. And you need, but at the same time, you need to have a telescope and seeing like 3, 5 years.
Yeah.
On
You
the
skate
horizon.
to where the puck will be, not where the puck is to.
Absolutely, rightly said.
So great. So offline we were talking about how India is poised to grow, and obviously within that how mutual fund industry actually will grow much faster. So ending comments, how HDFC AMC will look 3 years from now, 5 years from now, maybe when you will hand over the mantle to someone else, what will be the shape of the company when the new CEO, whoever that person is going to take over?
No, I think we are very blessed that we have the four-letter word HDFC in us. These words stand for confidence. These words, stand for trust among investors. These four words stand for integrity, values, ethics, and at the same time, we have a very audacious mission for ourselves to be the wealth creator for every Indian. To be the wealth creator for every Indian, we have a vision for ourselves which may sound even more audacious. to be the most respected asset manager in the world. And I strongly believe as we become $20-30 trillion economy, our markets would be so large. There would be asset managers here which will be globally, I mean, in terms of size, will be big, even from a global standards. But that won't be the joy. The joy will be that we are the most respected asset managers in terms of the way we look at all our stakeholders, and the way we are part of the evolution of the way India will become so large and so prominent in the world.
So I was just telling when I was coming to this office, this is the last point, that this is HDFC building. It's such an iconic building. The road is named after Mr. S.T. Parekh, the S.T. Parekh Marg it is. And I was just telling your senior colleague here that institutions like HDFC, Kotak, they have actually built the country. We are the younger ones who are actually living in the country built by
Absolutely,
HDFC. Yeah.
We're standing on the shoulder of giants on our sixth floor. There is a room once in a while when we have our meetings, and I see the picture of Mr. S.T. Parekh, and when I'm sitting there, you feel so humbled, so privileged, so honored that we are standing on the shoulder of these giants, Mr. Deepak Parekh, and everybody over the last several decades, the way they have built not only this organization but have been part of the evolution of financial services, of the economy, and of this country. So all of us, you rightly said that we are so privileged to be part of that. And as someone rightly said that success is like being at the right time at the right place. So we are so privileged that in India today we are at the right time at the right place. Yahi samay hai, sahi samay hai. But it's also, I think it's important that we don't sit on the past laurels, because I think we have to ensure that the legacy which has been built painstakingly over decades, how that continues, and we build on that.
Yeah. So we have to write our own story.
Yeah, but I think if we just do one thing, that the legacy they have built, I think the value system they have built, the passion they have built for the country and for the development of society at large. I always say finance must be for the ultimate good of society. Finance must be for the ultimate good of society. That's the ultimate, I would say, benchmark everybody needs to have, and that happens when you take care of all your stakeholders. I think your investors, your shareholders, your partners, your vendors, society at large, all the stakeholders, includes policymakers and everyone. I think if you do that, yeah, I think that's the legacy.
So yahi samay hai, sahi samay hai.
That's the right way to end.